Well, gold is real money, and so is silver. They know that this is the end of the fiat money experiment. We're going to go into a new experiment, but you got to ask yourself, what do I want to go into this next experiment holding? Do I want these fiat money products that are going to zero? Because that's what's happened 100% of the time historically. And this time is not different. I promise you, 100%, I guarantee you even. And you know I don't do that often.
Investments in gold and silver have performed very well for years, and this trend could continue in the years to come. Record negative real yields in the U.S. bond market will not be reversed quickly or easily, encouraging investors to buy precious metals. After the sell-off in stocks in early 2022 and renewed investor interest in safe havens with the start of the Russia-Ukraine war, the winds of change in the price valuation of the two asset classes appear to be turning, with long-term consequences that must be recognized. Gold and silver prices and valuations relative to other asset classes remain in strong buy territory. Long-term technical momentum trends have been on the rise for monetary metals since 2015. In today's video, we will share why Lynette Zang believes gold and silver are the best assets and how they can outperform all other assets. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. We are at a critical stage, and we cannot stress enough how essential central banks and their credibility are, and most importantly, and it goes away. They left the markets, offered it, but all fiat currency assets, that purchasing power is really what you need to pay attention to, because that's the real trend. Last year, central banks' total collective gold holdings were the highest in more than 30 years. They know what they are doing to their currency and their economy. And who knows more about money than central banks, because they control its value. Gold is real money, just like silver. They know that. This is the end of the fiat money experiment. Let's embark on a new experience. When we see these income-generating assets that are now very overvalued, everything will change. Then you can take some of your gold holdings and turn them into other assets when they're very cheap, like gold now and like silver. The money is for barter. Gold is all about holding and providing adequate coverage against any fiat currency assets you own. Plus, it's the proven security blanket in the event of a crisis. When you go into a crisis, you want to hold the asset that has the largest buyer base, not in a small area, but in the entire sector of the global economy. And it is physical gold. You hold it and own it. For normal people who actually go to the supermarket, put gas in their cars, we can see inflation going up and up every time we stop buying something. We are losing confidence that the Fed can stay the course. The loss of credibility means that even more political action may be needed to alleviate price pressures. Actually, let me translate this. This means that the central banks, the Federal Reserve, could be forced to go further to show the markets that they can regain control. This credibility issue is not going to be Wall Street moving the spot price of gold or the spot price of silver. It will be this loss of confidence. This is why credibility is so essential. When evaluating the performance of gold as a long-term investment, it really depends on the time frame you're looking at. For example, over some 30-year periods, stocks outperformed gold and bonds were similar to each other, but over 15-year periods, gold outperformed both stocks and bonds. From 1990 to 2020, the price of gold has increased by around 360%. So over the long term, equities seem to outperform gold by around 3 to 1, but over shorter time horizons, gold could win. As with any investment, it is important to consider the duration of the investment, as well as study market research to gauge understanding of how the markets should behave. Gold is not a foolproof investment like stocks and bonds. Its price fluctuates based on a multitude of factors in the global economy. With all investment portfolios, diversification is important, and investing in gold can help diversify a portfolio, usually during a market downturn when the price of gold tends to rise.
Now look, not all gold is made equal. There's gold and then there's gold. And my personal level of comfort are the collectible coins, because I believe that that is what's going to enable me to continue to hold it and own it and then use it when we see those income producing assets that are severely overvalued now. This is going to flip-flop. And then you're going to be able to take some of your gold holdings and convert it into those other assets when they are dirt cheap, like gold is now and like silver is.
That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.